Most people think the stock market is just chaos. Unpredictable, random, driven by fear, greed, and the latest news headline. But one man, a mathematician named Jim Simons, looked at that same chaos and saw something different. He saw patterns. Patterns so small, so faint, that no human eye could ever see them. And by finding those invisible patterns, he built the most successful money-making machine in the history of finance. Here's the truth most people never hear. The market doesn't care about your feelings. It doesn't care if you're scared, excited, hopeful, or desperate. It moves based on math, on probability, and on cold, hard data. Jim Simons understood this on a level nobody else did. This realization turned him from a brilliant mathematician into a legendary billionaire. He figured out that if you can remove human emotion and just trust the numbers, the market actually becomes predictable on average. Not every single time, not in the next 5 minutes, but predictable over thousands and thousands of trades across millions of data points. That's the core idea that built a $100 billion empire. But people always forget the part before the success. Before he was crowned the King of Wall Street, Jim Simons lost money, a lot of it. He tried trading the old-fashioned way using his gut feelings. He tried making trades based on economic forecasts. He tried to predict the future just like everyone else. And he failed again and again. So he stopped and asked a question that no trader had ever really asked before. What if the market isn't a story to be told, but a giant data set to be solved? While everyone else was glued to news channels, Simons was buried in numbers. While traders were arguing about what the Fed would do next, he was analyzing historical price movements. While the crowd was riding waves of emotion, he was searching for statistical patterns. That single shift in perspective changed everything for him. Simons and his team of scientists didn't act like traders. They acted like researchers. They ran millions of simulations. They backtested countless theories. They crunched numbers on a scale that Wall Street had never seen. And after years of relentless work, they discovered something incredible. The market was filled with tiny, almost imperceptible patterns, micro edges, small statistical biases that gave you an advantage, maybe something as small as 50.001% versus 49.99%. On its own, a tiny edge like that is completely useless. But what happens when you have thousands of those small edges? And what if you have a machine that can execute trades on them automatically thousands of times a day? Over years and decades, that invisible edge compounds into legendary wealth. That becomes Renaissance technologies, the greatest trading fund the world has ever seen. You see, Simons didn't just build a trading company. He built an algorithmic empire. His firm couldn't care less about news, rumors, or what some analysts predicted about interest rates. They only cared about one thing: data. Every price tick, every bit of volume, every market anomaly and inefficiency. They turned the entire stock market into one giant math problem. And here's the beautiful thing about math, and like a human being, math doesn't panic. Math doesn't get scared. Math doesn't get greedy. Math just executes consistently and flawlessly. That's why Simons' system kept winning year after year, even when the rest of the world's markets were in turmoil. So here's the biggest secret that no one ever teaches you about investing. And it comes directly from the mind of Jim Simons. You do not need to predict the future of the market. You only need to find a small, repeatable edge. A tiny, consistent advantage. A pattern that works not just once, but over and over and over again. Most people on Wall Street are desperately trying to hit a home run with every trade. Simons focused on hitting singles. Tiny little profits collected thousands and thousands of times. That is the simple formula for success that most of the world completely ignores. Now, you're probably thinking, great, but I don't have supercomputers or a team of PhDs. You don't need them. But you do need the discipline to adopt the right mindset. Here's how any normal person can apply Simons' way of thinking. Step 1. Stop trading with emotion. Fear and excitement are the enemies of consistency. They will destroy your results. Step 2. Trust probabilities, not predictions. Even a simple, rule-based strategy is better than emotional guessing over the long run. Step 3. Focus on small, repeatable gains. A tiny edge, compounded over many years, will always beat wild gambling. And step 4, have a set of rules and follow them mechanically, no exceptions. No sudden risks because you have a good feeling, no emotional detours. This is how you win in the long term. The real secret to Jim Simon's success wasn't just the money. It was his mindset. He believed that the market is a machine, so to beat it, you have to think like a machine. No panic when the market suddenly drops. No irrational excitement when it skyrockets. Just data, just discipline, just execution. This is the mindset that allowed his fund to average a staggering 66% annual return for decades, a record that no one has ever come close to matching. So the next time you look at the market, remember this. You don't need to be a genius. You don't need to get lucky. You just need a tiny edge applied with relentless consistency, without emotion, over a long period of time. That is how Jim Simons built his empire. And if you can adopt even a small piece of that mindset for yourself, your financial future will never be the same. Thanks for watching.